So trading can be a career, but I actually quit after the first year. Not a lot of people know that. I finally invested in Bitcoin. I bought it at the high, and now it's dropped, and I've lost loads of money. You know, it's a scam or it doesn't work. My biggest loss. Ooh, biggest loss.
Here we go. So, Shane, welcome. Give us a little bit of a background on yourself. I know you've got an engineering background, but how
Yeah.
did you get into trading?
So it all started back in 2013. Actually, it's funny because I watched Wolf of Wall Street, and I was like, I like this world, even though, even though now I understand that, you know, they were into sales and that kind of thing. I just loved that world, and it's very different from what I was doing with regards to engineering. So in 2014, that's when I got involved in forex trading, but I actually quit after the first year.
Okay.
Yeah, not a lot of people know that. Um, I just didn't. I couldn't take the losses, and my focus wasn't 100% there. I've actually got a property background as well, so during that time I was investing in property, and I wanted to focus on that. And then when lockdown came around in 2020, there's only so much Netflix and YouTube you can watch, right? So I thought to myself, this is a good time to actually learn a new skill and get back into trading. And so I really started and got into it properly in 2020. And ever since then, yeah, never looked back. So it'll be 5 years. In March, it'll be 5 years. So
So
yeah.
you've got a background in engineering. Do you think that gives you a bit of an advantage in the trading world? Do you think, or are you able to look at stuff more methodically and less impulsive? On
With regards to it being an advantage, yes and no. Because as an engineer, you have this voltage, this current, and it will equal this resistance, and everything is very set in stone to a certain degree, and you always have an answer for why something works a certain way. But in trading, it's not always like that. So you can sort of, as somebody that's quite logical, you can be sort of bashing your head against the wall thinking, why has the market done this when this, and this is showing me otherwise? So yeah, it's been a learning and growing process. You really have to just keep growing and keep developing in order to, you know, stick at it and make trading work.
do you think do you think the 10,000 hours theory has any cadence in trading, or do you think it's like the more experience you get? That's what I'm getting at. Do you think the more experience and 10,000 hours would help you become a better trader?
Oh, 100%.
Like you must get beginner's luck and stuff like that.
Yeah, you would. I had a conversation with somebody yesterday, and if it's not difficult in the beginning, and let's say you do have that beginner's luck and you make money in the beginning, at some point it's going to get hard. At some point it's going to get difficult. The loss is going to come. So yeah, it's definitely about putting in the hours. I like to call it chart hours, chart time. The more you look at a particular asset and a particular chart, it would tend to do the same things. And you'd only know this by the hours of experience and the time you've put into the craft. Most people know there's a war going on, but they don't correlate it with the markets. So they just can't bring the two together. You know, so yeah, 10,000 hours, yeah, applies to everything and definitely applies to trading.
You started in Forex and then you've moved over to the Dow and also gold.
Yeah.
How did that happen? Was it scary to move over, or did you have any mentorship on the way to sort of bridge the gap?
There are a few people that I look to that were trading the Dow, also known as US 30. What I find with indexes and commodities like gold, they tend to trend upwards. Like the Dow, the S&P, the Nasdaq, they're designed to go up. That's what they're designed to do. So if you look at the Nasdaq, S&P 500, and Dow, they're indexes and catalogs of the strongest companies. So that's progressive, right? So if you're not the strongest company, you fall off of the Dow or you fall off of the Nasdaq. So if you think about it, they're designed to go up in value. If you look at the Dow from the 80s or the 70s, it's only gone one way. Whereas I think currency pairs a bit more, they're not as, it's a bit more scattered. So yeah, I think it's a cheat code trading indexes and commodities because they're only going one way, and that's upwards.
So what you're saying is, say someone's new to trading, and we were talking about the S&P. That's like the top 500 companies. Is that right in America?
In America, yeah, pretty much, yeah.
Cool. So you'd have what? Pepsi, I guess, Coke, Apple,
Yeah, those, yeah.
all of the big guys. Cool. And then essentially over time, more and more people invest in them. So essentially, they'll always rise.
That's exactly it, yeah.
You might say there might be volatility day to day, hour to hour, week to week, but the trend long term.
Trajectory, yeah, that's correct.
Okay. So
Yeah.
what do you think? Say for instance, I wanted to get into trading. What sort of time horizons are good? We talking weeks, months, years?
Um, so trading can be a career, and it is a skill set. And if somebody's really serious about it, I'd always say to them, treat this as if you were going to study to be an engineer or a doctor or an accountant. When you take a university course in any of these fields, it's going to take you 3 to 4 years to get qualified, get your qualification, get your degree, and go and find work. And I feel like with trading, people don't want to look at it like that. You know, if it's not working within a month, or if it's not working within a couple of weeks or whatever, 6 months, they think, oh no, I'm just going to leave this, and
Yeah.
you know, it's a scam, or it doesn't work, or you know, I've lost all my money and stuff of that nature. When really you should look at the money that you've lost as a tuition fee, or even you need to look at trading as a business and look at it as, you know, the money you've put into your business. Because when you start a business and you invest 20, 30,000 pounds, that's a minus on your balance sheet.
100%, yeah.
You know, until such time you may break even and then move into profit. And it's the same thing with trading. I think if people took this approach and had this mindset coming in, then they'd get to where they want to get to.
So long-term thinking there, as opposed to short-term money, quick money.
Yeah.
What do you think social media has the role with trading? Do you know, I can imagine there's people out there who give it a good name, a bad name, and
Oh yeah. You got the I'm very into supercars, don't get me wrong, but you got the guys with the Lamborghinis, flashing the lifestyle, the watches, the clothes, and trading on the beach, and it gives people this perception that, oh yeah, I want to trade on the beach, and not having to be in an office or out on a building site. I want to be, you know, making money while on the beach. When it, I'm not gonna say that it can't be done, but yeah, it can take time, and take it with a pinch of salt. Yeah, it's all marketing at the end of the day, and you know, they're doing this to attract customers.
yeah, I thought it was something like that.
Yeah,
Sort of
yeah,
selling
yeah.
snake oil a little bit.
Yeah.
Making out it's probably easier than it is, whereas
That's exactly it.
anyone I've ever known who's done really well in their business, in property, etc., trading, they've always got hundreds of hours, thousands of hours behind the laptop, or you know, whatever they're doing to deliver. You might get a bit of beginner's luck, but it's normally people actually putting in time to understand what's going on.
100%.
What's been your biggest loss and also your biggest win?
My biggest loss. Ooh, biggest loss. Okay, so later we'll talk about funded accounts and personal accounts. There's ways to get funded with 6 figures plus, and there's trading with personal accounts. So you'd open up a brokerage, you sign up to a broker, and you'd deposit, say, £500, for example, into that. So
Let's jump back in on that. So then, what's a funded account?
okay, so you have prop firms out there that look for profitable traders. They do this by how can I word it? They give you a test, also known as a challenge, and the goal in that challenge is to make. There's 2 phases: phase 1 and phase 2. Phase 1, you have to make 10% of the account balance. So let's say you buy $100,000 challenge, you have to make 110,000. Sorry, you have to make 10,000, so the balance has to be, you know, 110,000. And you have to do this without losing 10% overall, or 5% within a day.
Right. Okay. So there's specific parameters that you got to play within.
Yeah, there used to be timescales. You used to have to do this within 30 days, but now you have however long you need to do it. So that's phase one. Once you've made that 10,000, they'd say, well done, let's get you onto phase two. Phase two is the same, but all you have to do is make 5%. Once you've done that, they'll give you a funded account of 100,000.
And then you would essentially trade with their money.
Yeah.
They take the profits, you get a bit of a cut. Is that
Yeah, there's a profit split. So it's normally 70-30. So 70 to you and 30% to the company, or 80-20, usually around that mark.
but if you're reliable, then essentially they're making some money and you're doing all the legwork. It's their capital that's been invested.
That's correct. But there's so essentially they make majority of their money by people failing the challenges. Yeah, 95 to 97% of people that take the challenges fail.
No way, really? Wow.
So the challenge fee can be anything from $100 to $1,000, depending on the account size. Yeah, it could vary, but yeah, depending on the account size. So imagine you've got thousands and thousands of people with the dream and a goal to get funded, and a lot of people jump into this before they're even ready to take the challenge. They're thinking, okay, maybe if I get lucky and pass, then I'll get funded and make a load of money. But trading is very difficult. People come in, they lose, and they keep buying more challenges.
Oh, really?
Yeah,
Oh,
yeah, yeah.
okay.
So
that's interesting.
yeah, so majority of people fail. And in the beginning, I did fail a few, but now I'm at the point where I passed them quite comfortably. But it's taken a while to obviously get here.
It's just experience.
Just experience, yeah.
And with personal accounts, so you can put your own money and then essentially start trading,
Yeah,
but you need a broker.
you need a broker, yeah. And it's good to find a broker that's number one regulated, so FCA regulated, or whatever country you're in, regulated within that jurisdiction or country. Fast withdrawals. When they're not regulated, if you try to withdraw your money and you don't get your money back, or they're delaying your withdrawal, there's pretty much nothing you can do because it's not regulated. So it's best to find a broker that's regulated, just so you know your money's protected and you can definitely access it when you need it. And number three, I'd say you want good customer service and quick replies and emails and live chats and stuff of that nature.
Have you got any companies or any brokers you would recommend, or would you recommend people just find their own?
So I use a broker called Vantage, and I've used them from the very start of my trading journey in 2020. So ever since 2020, I've been with Vantage, and they've been amazing. Good, yeah, very good.
That's good to know. Let's talk about temperament. What makes a good trader? What type of psychology, what type of attitude do they have to become a successful trader? Do you see patterns?
100%, definitely. Yeah. I'm quite calm and nonchalant. My parents say I'm like horizontal. So relaxed I am, too relaxed. So I think that's definitely helps me. Because when nobody likes to be wrong and nobody likes to lose money. And in trading, that's happening at the same time. You're wrong and you're losing money at the same time. So it can really get you riled up and play with your emotions. Nobody wants to take a trade and then lose 50, £100 within a minute. It can really...
Wow, it's that quick.
Yeah. Yeah, when you're trading, if you're trading during high volatility and there's a lot going on, it can happen that quickly, So you really want to first be aware of your emotions, because you can't improve on something you're not aware of. And it's definitely more for people that are, cool, calm and collected. That's not to say that if you're not, then you can't get involved in trading, but you can work on these things and improve as an individual.
Yeah. I was going to say that sort of brings us on to a nice point, really, with regards to like mentors. Have you had mentors in the past, or do you offer mentorship or anything like that?
Yeah. So I offer mentorship, and a lot of people in this industry, they offer mentorship before they're really ready. So I wanted to prove to myself that I'm really good at what I'm doing. And, if you want people to have confidence in you, you have to go have confidence in yourself, right? So I wanted to first have that confidence in myself, really prove to myself that I can extract profits from the market constantly. And then yeah, I'm more than happy to mentor and help people. And in fact, the guy that I've mentored is now a funded trader.
Wow.
Yeah, so that's within 5 months. He came to me in June this year.
Okay.
We've worked together.
Yeah.
He's took his funded challenge and he's funded by FTMO, which is the most reliable and best prop firm out there. So
The proof's in the pudding with that,
Yeah.
isn't it? Really, because I think that's who I see winning. You know, whether in trading or property or business, whatever aspect you're in, authenticity. When the proof's in the pudding, you can see this guy's got the back catalogue. He's got the track record, not only in himself but also like the guy you've just worked with. Then yeah, it builds confidence and people can believe what's going on.
to answer the second part of your question, who I've learned from, throughout my trading journey, so it'll be 5 years in March, and I think it took me about just under 2 years to get profitable.
Okay.
So in the first 2 years, I was losing money, going back and forward, um, and there was a few light bulb moments, and it came firstly from a guy called Sam Seiden. So he's a big supply and demand trader. I think he used to work as a floor trader in Chicago, and then he taught his stuff. He opened up, mentorship and a YouTube channel and stuff like that. So that was the first kind of aha moment, if you wish.
And what was it he was saying that was so inspirational? Is it his approach, his temperament, his?
More so his approach, because obviously me having an engineering background, I really need to know why things are happening in the market. And the way he just worded things and the way he said, okay, the market reacts at this level and at this point because of what's going on behind the scenes with institutions and the whales investing money here at this point. So that was just key. And, it gives you more conviction when you're trading, because the biggest thing as a new trader is you'd open a trade and you won't hold it long enough because you don't really know why you're holding it. So I see new traders opening trades and closing them quickly when in profit. But in loss, they're praying that it's going to come back to, break even or in profit, and they hold their losses for too long. So the reason why that was a real game changer was because, he said, okay, this is happening at this area of demand or this area of supply. So the market should hold, the trade should hold, and it should move to, the next area. So that was the first aha moment. And then there was a guy, well, the name of his mentorship group is Capital Hungry. And he's more focused on fundamentals and macroeconomics. And, things that happen off the charts, like, like banking, geopolitical tensions, stuff of that nature, which not a lot of traders look at.
Would you say that current affairs, if you've got an understanding of current affairs and sort of like what's going on in a few different major countries, especially if you're dealing with the Dow or anything like that, obviously the price of gold and stuff around the world, if you're aware of just generally what's happening, what wars are going on and that type of stuff, it's going to play into it?
Oh, definitely, 200%. I mean, when you go outside, you look out the window and you'd see if it's raining, if you need to bring an umbrella, if it's cold, you need to put a coat on. And I feel like knowing what's going on in the world, that kind of gives you an idea of the sentiment and the terrain and the weather, if you wish. So okay, there's a war going on. Usually when there's wars going on, safe havens tend to skyrocket, like gold, for example. Gold over this year has just completely skyrocketed due to what's going on around the world. So if you're oblivious to that and then you're trying to sell every all-time high and you're seeing gold come up and you're like, okay, it's going to come down now, you're just kind of, shooting yourself in the foot.
Yeah, I guess the other thing with war is you've always got is it Boeing and stuff like that? You're gonna have those US stocks which are probably going to go up because they're essentially is it Lockheed Martin, stuff like that? They're going to be manufacturing the actual defense. It's going to blow up.
Stocks, normally.
Yeah. Whereas if you're unaware of it, you might be thinking, why is that moving? Or
Of course.
and there's normally a reason behind it. Okay.
Or some people, most people know there's a war going on, but they don't correlate it with the markets.
Okay.
So they just can't bring the two together. So they don't understand how to, yeah, how to. I don't want to say benefit from war because
Yeah, no, maybe cut that bit, but it's not going to come out too well.
yeah.
I know what you mean. Yeah,
But yeah,
it's
they
a
don't
true
ask for it.
reflection. Would you say the market's always a true reflection of what's essentially happening?
Yeah.
It always corrects itself, doesn't it? Really.
And the market actually moves on anticipation.
Okay.
So it usually move before something's actually happened.
Okay.
So if the market feels as if a war is going to happen, it will start skyrocketing. Like gold, for example, will start skyrocketing before the wars actually happen because the market just moves on anticipation.
Right.
It's that whole term, buy the rumor, sell the news.
Okay.
Yeah. So
Explain that a little bit.
So yeah, the market will move on anticipation. So let's say there's a rumor of war, like we've been saying.
Yeah.
The market will move before the war's actually taking place, and then by time the war has happened, the market's already priced that in. So what I mean by pricing something in is, if you hear something that shocked you the first time, you're gonna be like, oh my god, it's a shock. But if you kind of hear it again, it's not as shocking as the first time you heard it because you've priced it in. You know about it.
Yeah, a bit like in politics, they'll sort of leak stuff a couple of days before in newspapers, and it sort of come out that X might be happening in the budget, or Y might be happening with whatever's going on, or someone's going to lose their job, and then when it comes out, you think, oh, okay, yeah, I heard about that.
Yeah.
It softens it a little bit, and you're saying the market always moves ahead of the actual event.
Yeah.
Interesting. Talk to us a little bit about Bitcoin. Are you in Bitcoin? Are you not in Bitcoin?
I was in Bitcoin. It's a great asset. You can see the returns. I think it's trumped every other asset class out there, crypto. Very volatile. I think by the time everybody starts speaking about it, it's a bit too late to invest because there's always like these seasons and times where everybody's talking about Bitcoin, and then it sort of quiets down, and it normally quietens down when it's dropped in price massively, and that's actually the point in which you want to be investing in it when nobody's talking about it. By the time you hear people at work talking about it around a water filter, or it's you don't really want to be investing that time because that's when you hear the horror stories. Like, I finally invested in Bitcoin, I bought it at the high, and now it's dropped and I've lost loads of money, and yeah. So I think the money's made in the bear market when your dollar cost averaging at the lows, and not looking at the price, just putting your money in and not getting emotional, and you've got that time horizon as to I'm going to leave this for a year, 5 years, 10 years, or whatever. 10 years. So people that invested in Bitcoin in 2014, in 2024 now, could you imagine? And they had that 10-year time horizon. Oh, yeah. And they're just every week putting in maybe £100, £50.
What's the best strategy? Say, for instance, you're 30 years old and you want to get into trading, and you had £1,000 to spend. Would you put it all in on one day, or are you better off drip feeding it in?
Is that trading or investing in crypto?
Oh, sorry. Yeah, investing. Say, for instance, you're investing.
If you're 30 and you got £1,000, I would say spreading it across different asset classes. So maybe not all into crypto because crypto is very volatile. I'd say maybe put a bit into your how do you word it? So you got your altcoins. So you've got Bitcoin, which is a daddy, and then you got your altcoins, which are the other
Ethereum and all
Yeah,
those types
yeah,
of
yeah,
guys.
yeah,
Okay, so you
yeah.
might spread the bet a little
spread
bit.
it, spread a little bit, and then maybe you might want to do a bit of Nasdaq and S&P 500, and stuff of that nature.
So what is the Nasdaq?
The Nasdaq is the top 100 companies in the US, but it's more tech based.
Okay.
Yeah, so it's not so much your financial companies, it's your tech companies. So Nasdaq is very volatile.
Who's in the Nasdaq? Is Apple in that, or are they in the S&P 500?
Apple in the Nasdaq.
Okay.
Yeah, Apple in the Nasdaq.
Can they be in the S&P 500 as well, or not? They can only be in one.
But Apple is in the Dow Jones as well. So yeah, you can be in multiple. Yeah.
And is the price the same across all of them?
Yeah.
So it'll be reflected there.
That's
Share price will be the same in the Nasdaq as well. as in the S&P 500, and then the FTSE 100. What's that?
That's the top 100 companies in the UK.
Have you ever invested in that, in like an index fund or anything like that, or
I haven't.
do you feel like you'd have more of an insider knowledge with that, or any insights into?
It's strange. You'd think so because I live in the UK, but I've never really talked to the FTSE for some. I don't know why. Yeah, I just haven't. I do have an ISA account, ISA. So I'm sure some of that is being, funneled through the FTSE or however they invest it or whatever. So I'm maybe in the FTSE indirectly, if you wish. So yeah.
Say, for instance, you were working a normal 9 to 5, and then you're, looking into a little bit of crypto. You're looking into trading and stuff like that. How would you get into it? So you've already got a 9 to 5 job. You're normally doing your thing. Maybe got a house, got a family, and stuff like that. But you really want to get into trading. What's the best route in?
I would definitely firstly start paper trading, so trade with a demo account.
Okay.
Yeah, so a demo account is just simulated cash.
So it's not actually your money. It's like it's essentially
Yeah.
just fake, and you can just play around with it. You can win, you can lose, stuff like that. Any good apps or anything? Anyone to recommend? Or?
Every broker out there will offer a demo account. Any broker, yeah. Obviously, like I mentioned earlier, you want to use a regulated broker because essentially the account you open the demo account with is most likely going to be the account you open a real account with.
Yeah.
So you want to just just use the same account. And you definitely want to look for mentorship. You might want to leverage a trader that is so okay. Let me go back a bit. Sometimes people there's two ways to get involved in trading. Sometimes people want to learn the skill, and sometimes people just want to make money. So you need to determine what side you're on, because if you're in this to learn a skill, it's going to take a while to make money, and there's no I can't say it's going to take 6 months, 1 year, 2 years, 3 years. It all depends on you as an individual, how much time you're willing to put in, how quick of a learner you are, how patient you are, loads of different things. So learning is one thing, but say you're like, okay, I want to make money. I'm going into trading because I'm seeing people make money. I want to make money. So you may leverage an expert, and maybe they have live calls or they have groups where they give out their trades. And as long as you're good at managing risk, you can make money by copying the trader that has done the analysis, got the years of experience, knows when to get in and when to get out, and you're essentially just copying their trades. So it depends. You need to really understand where you are and what you want.
Are you after quick money? Are you after long-term investments, or are you after essentially learning a skill which will then pay dividends in years to come, I guess?
Of course. I would say you can do both. Like if you're willing to learn, just open a demo account, look at strategies, and stuff of that nature. Have a demo account where you take your own trades. But if you've got your real account, on the real account, take trades from somebody a lot further ahead than you are.
Are the best traders the oldest traders?
Oldest with regards to experience?
Age, yeah. If you had someone who's 25 years, 30 years deep here, compared to someone who's maybe 4 or 5 years in.
Yeah. I mean, if you've got 30, experience is the best. You can't beat experience. I mean, if somebody's been trading for 30 plus years, or even 20 plus years, they've just got more know-how. They've seen more. They've probably perfected their edge, their mindset, their mentality. I mean, that maybe goes because I'm, only 35 and been trading 5 years. But yeah, I would say that. And that's why I'm so excited about being in this industry and trading. Because as time goes on, I'm only going to get better and better. That's what excites me the most. Even if you look at athletes, as they age, they go on a decline and have to retire. which affects their income. But as a trader, as time goes on, you're just gonna get better and better as long as you've got your faculties and you're still in the game. Yeah, yeah,
I think Jimmy Carr said something about that, didn't he? Find something you can do at life that you love and you can basically get better at over time,
yeah,
as opposed to peaking. Say you play football or soccer, you know, and you peak at 35, then you're done, you're out.
yeah.
You know, you're not going to be the best footballer at 50, are you?
Yeah, that's it.
You know.
That's it.
Talk to us a little bit about YouTube. Any good documentaries you've watched on there?
Yeah, there's been quite a few. And you know, I've used a lot of avenues to learn. So courses, books, documentaries, movies. But to answer your question, there's one that sticks out. It's a guy called Nick Leeson. It's the he took down one of the UK's oldest banks and largest banks, Barron's Bank. Yeah, yeah. And that was a great watch. Yeah, I'd recommend. I can't remember the actual name of it, but I mean, if you search Nick Leeson Barron's Bank on YouTube or Google, you'll find it.
Even if you're not into trading or anything like that.
Yeah,
it's
even if you're
probably-
not into trading, yeah, it's such a good watch. Yeah, yeah. And it's funny because he was a professional trader working for one of the biggest banks in the UK, if not the world, and he was making the schoolboy mistakes that everybody else makes, just compounding his losses. Didn't want to get out of a losing trade, just taking more positions, and the losses just going more and more against him. And it shows it happens to the best of us, you know. So if you are a retail trader and a newbie and you're beating yourself up about these kind of things,
probably not going to be as bad as Nick.
yeah, no, you ain't took down a whole bank. So yeah.
Definitely. Cool.